Recording.
This is Market Week Live for November 21st, 2025. Information and support for traders and investors. Welcome, everybody. Still people coming in the room. And welcome to those of you that are watching us on YouTube. And certainly, if you're watching a clip or a repeat of this on YouTube, we're certainly glad that you tuned in to take a look at what we have to share. Coming up in this show, we'll have our express round. We're going to open up the floor to our level 1 to 4 members. They are invited into this webinar, and then they can ask questions in the Zoom Q&A. And I see some questions are coming in there right now, and we will do our best to cover those today. And then you can ask questions about our services, trade planning, chart analysis, trading issues. Love to get some questions on trading issues because I don't often get a chance to answer those. And then Matt is going to give us a review of our services, a brief look at what our Black Friday deals are, and what we do every single year is give the gift of askSlim. You're going to love these specials. And then I'll bring you my stock market analysis, some of the evidence probabilistic projections in price and time. Before I get to the Russell and SPX and VIX, I'm going to do a special little Slim's take looking at the AI group of stocks. I think you're going to find that interesting. And of course, you'll see our proprietary studies and analytical process all along the way. And when I open up my section coming up pretty soon in the Q&A, I'm going to do a special look at the CBOE stock and do a little teaching around that. So I think you're going to find that interesting. Get acquainted with us. If you never have been a member, go to the top of our website at askSlim.com. Go into the free stuff and sign up for SIR Lite. Matt does that every single day. It's free daily analysis on the S&P 500. That'll give you a very good idea of what we do. Make sure you check out Slim AI. That's in the bottom right of all of our pages. Now, if you're a member and you're on a members page, well, you have full access to Ask It Everything about our analysis. And if you want to upload a chart, it can help you with that, with the analysis. For people that are brand new and come to the front page of our website, that's a little different. It can help you with understanding what we bring to the markets, what we bring to help you, and about the askSlim content that we share with you and all the education. So it can still give you great answers. It just doesn't give you all of the answers that our members get. On YouTube, subscribe to the channel, click the notification bell, like this video, give it a thumbs up. On X, follow us at askSlim. And any questions you might have on what we present here, you can write to Matt at askSlim.com. Remember that everything that we do is for education and educational purposes only, no matter how we present it to you. Everything we bring to you is for the purpose of you sharing it with your own investment advisors or investment decision makers, and we always want you to consult your own trading plan. Please do refer to our terms, disclaimers, full legal information at askSlim.com. This is our contact info for membership issues or website issues. You can write to team@askSlim.com. And anything you have questions on our content, information analysis, and education, or first-time specials, or anything that we're going to show you about our holiday specials, you can write to Matt at askSlim.com. Okay, today's hosts, sadly, we're without Katie today. She couldn't join us. So we have, of course, me, who's been at this for 51 years. Yes, I started back on the CBOE floor in 1974. There wasn't even puts traded. We were just in the pilot program, only trading calls and stocks. So that was really the early phase of option trading. Matt's been with me a couple decades, RV for I think it's 18 years now. So amazing how long we've been all been together, and we're all experts in cycle analysis. If you want to see our interviews, you can see it at askSlim.com, about askSlim, meet the team, and we have some great interviews that you can see there, and you'll learn more about us at that time. All right, questions and comments. This is for level 1 to 4 members. Remember, anybody who's asking us a question in the Q&A is a level 1 to 4 member. And if you do want to participate, great opportunity now, because you can take advantage of our holiday specials and then come in and join us the next time we do a live event. As I said, I'm going to do a special opening now as I'm going to look at CBOE stock, which we had a request from a member that came through on Discord. And then coming up in here, I can see that there are requests for me to do silver, ETH, natural gas. So I'm going to take a look at that. ETH and slash NG, and gold, which is slash GC. Silver, wow, the metals they want. So that's five of them for me. And then uranium I don't have, so I don't know if we have that. The rest of the symbols will be taken by RV, and that's a hood and Palantir and uranium if you have that, URA. And then I see there's one question there from Roger that's actually a trading issue. So I'm happy to get that. So I'll wrap up with that one in my section, and then I'll hand the rest over to the to RV. And sadly, Katie won't be here. So some of the symbols you may ask for may be in Katie's realm. So I'm not sure which ones of those RV will have, but we'll find out once we get into that section. So I've got a pretty long one here. I have six symbols to look at. One of them is also TNX, which is the interest rate market. And that's going to be interesting because I'm going to show you why I believe something contrary to what most people do, and also especially around the direction of interest rates coming up. So we'll take a look at that. I have six things to do. Plus, I'm going to start now looking at the CBOE. So this is the CBOE. So last week, a question had come in on the CBOE from somebody in our Discord and wanted some bigger picture in there. So I had done a monthly analysis in there, and that monthly analysis got posted in what will be, and this is just a little soft sell announcement for our level 2 members. Plus, we're going to be coming out with an investor hub, and I think you're going to find it fascinating. So that's already uploaded into the longer term stuff in there, and you'll be able to see that pretty soon. So I decided to take a look at it more on the intermediate and shorter term and do a little teaching around it. So you see here on the left is the CBOE weekly, and on the right is the CBOE daily. So let's get my pointer up here. And then I'm going to share some analysis in here that's really some teaching around cycle analysis. So the first thing I want to do is I want to expand the weekly chart right here. So what we have on here are two moving averages, and I like to keep these moving averages on here, which are a 13-week and a 34-week moving average. In this case, they don't seem to be playing that much on here. Let me just confirm. Sorry, I have a 34-week moving average and the reversal scout on there. And the reversal scout is a proprietary indicator. We use that for some information regarding understanding the cycle rhythms in the market. So what I want to do now is I want to look at the weekly analysis in here and show you how there are rhythms in here that are important to look at. And I'm going to kind of pop those out at you right now with looking at the weekly chart. So here is the weekly analysis, and here's what's key. First of all, I'll jump to the analysis that I did on the monthly, and that is the monthly analysis is super strong. And it has been rising and driving these upward configurations that you see. Now, when I use the word configuration, it applies to the higher peaks and higher troughs that you see right in here. This was kind of a neutral a cycle right there, maybe slightly negative, and at an 18% drop, pretty good. And then you see this positively configured cycle and right-hand translations. What that means is that the cycle peak came on the right side over here. That's what happens under bullish upward pressure. And you can see that where the reversal scout turns up over here, it gives us a hint that the low is in place, and the same thing happens right over here. And you get the same thing from the downward turns right over there, right over there. So you get some good information about cycle analysis on the weekly chart. So let's just, look at this, and we can see that the momentum in here is still rising, and that this cycle right in here looks like it's still rising. Now, I have a note to myself right over here that the monthly and weekly cycles sync up either in March or in September, depending if it's this cycle low that makes the low right around March 1st, or if it's this cycle low that makes the low about the second or third week, ideally of September. I don't really know, and I'll have to look at shorter term analysis to know that. But in my mind, I know that at some point in here, this will turn over. And if it starts to look really negative, it's going to be because the monthly longer term analysis is playing on it. Now, what's really key is looking at the shorter term analysis in here and then seeing how these cycles are forming in here. Now, right now you see there's no cycle analysis on there, and what I'm going to bring in is a daily chart right over here. And you can see right over there, it's an unusual daily chart because what I've done is I've put the weekly analysis on top of the daily analysis. The daily analysis that you see right over here has a 48 bar cycle, 48 days. And you can see there are 3 of those right in here that make up the big cycle right there. So that's this cycle right over here on the weekly, and this is how it shows up on the daily. And you can see that the upward influences right over here are what cause you to get the biggest upside impulses compared to the downside impulses. So it's longer advances and more brief declines being affected by the weekly. This is what we call multiple time frame analysis, and this is why we believe it's so important. And also that the messaging from one time frame to the other time frame is so important. We have a special now on our cycle analysis workshop, and you will be able to see that. Let me just make sure I have the cleaned up. Yeah, it's the right ones. So let me just bring this up and widen this up a little bit. Now you can see in here, this is that cycle, the first cycle I showed you on the weekly. This is the second one, and this is the one that's in a rising phase right now. So what do I learn in here? First of all, these are all positively configured cycles, all 3 of them being driven up by that bigger weekly. The weekly is being shown to you in what we call envelopes. In the original book that I read in 1975, Profit Magic of Stock Transaction Timing, I have a bunch of copies of those, but they're way out of print. Hurst, who wrote it, JM Hurst, always used envelopes. I like to do this because it shows you the envelope weekly cycle, and right over here where those key lows are, and you can see how the distances are pretty close right over here. And then the minor cycle. So there's these vertical lines right over here, and here. So what am I looking at now? I'm looking at this cycle, which looks like it comes down towards the end of December. Of course, we're looking for a weaker market into December. What that says to me is that somewhere in here, and I'll just I'm going to fix this and I'm going to duplicate that so you can see, somewhere in here, this will turn down. Now, the question is, when the minor cycle turns down, and bottoms in here, will the weekly cycle right in here continue to allow it to make higher highs? Well, if this low holds right over here in this December, then the odds are it will continue to make new highs. If this low over here ends up to be equal or lower than this right over there, it tells me that the weekly cycle here has turned down, and we would expect this period out into March or September to be potentially sharply lower. So we learn from this messaging. Now you can also see in here the slim ribbon and the reversal scout positive in here, a little curling, but not anything that says momentum has turned negative. You can see here as I blow this up on the bottom that we have an upward resumption signal right over there on the momentum on the slim ribbon PO. It's been positive on the option bias indicator, so all of this has said stay on the long side. And so that gives us an indication that we'll probably get some more upside tries in here. So that's a look at the weekly and the daily and how we use the information in here. And now when I look at these other charts coming up in here that you requested, or an RV does the work, this is really what we look at. We look at the multiple time frame analysis, we look at the momentum conditions, and of course then we put in support, resistance levels, projections, and some important notes to ourselves and to our members as to what we believe. CBOE still in very bullish shape, and you can see in here how that analysis speaks to us as we look at that. So please go to askSlim.com to the Cycle Analysis Workshop tab at the top and read some of the information there, watch the free video, and you'll get a good idea as to the type of analysis that we do. So let's take a look now. As I look at my group of things, I'm going to look at silver, gold, Ethereum, natural gas, and the interest rate. So let's take a look here first and look at Ethereum, ETH. So this is the analysis on Ethereum. Now, we turned bearish on Ethereum a long time ago. And you can see looking at the weekly chart here, where the reversal scout turned over, it warned us of something. It warned us that this was an early peak being made, or a left-hand translation, which is bearish. You can see this was noted as an extreme right-hand translation, where the whole thing rallied and then it had a minor decline and then tried to rally again. But then I'll just grab this line right over here. Once it broke the cycle low right there, it warned us that this cycle had turned down with momentum negative and a breakdown of that previous cycle support. It really gave us a sense that there was some weakness in here, and we thought the market would go down. Now, my projections in here weren't quite originally as deep as this because there was no way that I could know that the crypto market would get into free fall, as bearish as I certainly was on Bitcoin also. But where the momentum turned negative here and this breakdown came, it said that this area between these two cycle timing lines right there was the area of where the trough would likely come. So that means it would likely decline, and the weekly and the daily cycle sync in mid-December to mid-January. And I'll show you that daily pattern also, and you have that right in here. So here's where the sync would have been in November if it was positive. Didn't really look at that as a possibility, and we thought it would rally, get into the negative area there, and give us a selling opportunity, but it was really negative. And then what it did was it broke that cycle line. I'm just going to grab this right over here because I didn't update that. And there's that cycle low that occurred right there. And I'll just grab that note because that's where it belongs. And if it breaks that, it's a warning, and it did so. So where are we right now on this daily chart? Well, we have this resistance right over here, which is declining. It's because this rally was so minor, and because it broke down here, it tells us that we're in a declining phase that lasts all the way out here to towards the end of December. And you can see in there that, because this is broken and all this time to go, it's reasonable to project this down to crazy 2100 there in Ethereum. But we're in free fall right now, and of course that could happen. So if we got the rally, and in this area right over here, you can see there's still a lot of time for a decline, it means that this is a sell zone that should be a place to, if you're long, sell. If you want to get short, well, that would be the entry, and that's just over 3,000 to maybe 3,150 right in there. So that's where that sell zone is. This looks like a decline coming well into late December with the potential of getting down as low as 2125 based on where that support is from the weekly chart. So ETH, a very negative look there when we take a look at that. Let's take a look at the natural gas market /NG. This had improved really quite a bit. When we look at this, here's your weekly and your daily in here. And what happened was that you see this low right over here? I mean, spot on. It really came very much on time, maybe just a week past the ideal for this intermediate cycle. Now, because this was a downward slope right over here, the probability of getting to this high up here was really only about 20%. But once it does, it really gets over the 78.6, which I don't have that one in there, it warns us something has changed. And what had changed were a couple things. First of all, very, very strong import demand or export demand from the US into Europe. They have a lot of need for natural gas there. And the second thing is AI, which has a massive demand for electricity. and that means a big demand for natural gas. So that's what happened when that caught on, natural gas took off. And then this rising phase right over here told us that conditions had changed. This thing had really repaired ourselves. It repaired itself. Now you could see the minor cycle, 1, 2, 3, and 4 in here. Here's where this one bottomed. That's where that one joined in after, and that brings a big decline when all three of them are coming down here. Now what it tells us is that there's just a minor cycle coming up right over here. So this dip, or maybe another week or so of a possible dip, should be brief and then moving up again. And that's why we have this arrow pointing up here to 4.92, $4.92 as likely. If I look here at the daily, because there are multiple cycles in here, I omitted all the cycle lines. And I see where this minor cycle pulled down and then this began moving up again. So it makes me wonder, looking at that, if we already have continued that weekly cycle right over here, if actually that minor cycle did occur and make its low right there where the daily timing is, and now it's moving up again. So I don't expect any kind of a pullback in here of substance. The slim ribbon pointing up, the slim ribbon the reversal scout pointing upward. And here, look at the upward signal right there as it made the low. This is the slim ribbon PO giving you the upward signals. Look at the bearish signals right in here and how valid they were when it was telling you momentum on the downside was coming back. And now it's telling you strength here. Option bias indicator giving you strength, says keep your option positions on the long side. Remember, these are level 4 indicators, which you can get if you take the level 4 give the gift special. Now we'll look for the continued strength in the natural gas market. We'll look at gold, silver, and interest rates right now. /GC is the gold market. Gold and silver are different right now. And here's the weekly cycle in here. There's a potential that this is the weekly trough right there. Or it goes out into January, would be here. That's a long way out, and I'm not really sure. But the silver pattern is has more decisively made a low there. So we could just be in a corrective period here, choppy. You can see the reversal scout is just rolling over right over there. And, I don't really know. Is this the low? Is the low coming in January? But to me, this is all a buy area, because once we get confirmation of being in this rising phase here or in the silver rising phase there, then I would expect this market to be blasting off to the upside again. And whether it comes from here where it's moving to the upside there, or it's already made the low and it's going to blast off to the upside there, one of those spots is where I believe it's going to happen. And later this month, when I do my individual, projections for next year, and I say individual because I'm not going to do one big show like I have before. I'm going to break that up into pieces for the key markets throughout December and do the big pictures in there. And then at the end of the year, I'll only bring the stock market. So those will be posted in our new investor hub, which I think you're going to find just fantastic. So this is the picture here. So I'll show you silver and you'll see how that relates. On the daily chart right over here, you can see that, well, this is where those lows were right over there, silver and gold. And then it got up here in the resistance and then it's backed off and it's just moving sideways here. So if this gets passed down under these lows right over here, this is 39.40. This one over here is 39.90, 38.95. If it comes down, rolls over and breaks these, then I know that it's the January low that we're looking for. If this comes up and then sets a positive configuration, then again, messaging from the individual time frames, I will then know it's the earlier low. Can't really tell now. I'm not excited to buy it now, and most of you know that I've been a super bull on these metals and buying a lot of them. So if January gives me the opportunity, I'll certainly be adding to my position, because I'm just a little tip. My monthly analysis that I'm going to show in December is bullish. So this is what gold looks like right now. Now keep your eye on this, because I want to come over to the silver market. You will then see the comparison And here is the silver market here. So you can see that on the weekly chart, it looks like gold, but it got above this high. Being that it did that, that is a message to me that this news cycle has begun already. There's less of a question in my mind because it surpassed this peak right over there. Now, this could be anomalous and it could follow gold and could make one more low a little bit later out. I'm not 100% sure either, but I think it's more favorable than I see in the gold market. Now you look at silver, and that had that big rally on the daily chart, and it came down and tickled the 78.6 and bounced sharply in that support zone. So again, this isn't enough traction for me in here to be excited. Still, I have a positive condition, just as I told you, on gold, with the reversal scout positive, the slim ribbon positive, the slim ribbon PO signaling upward resumption signals. And look at the option bias indicator. It got neutral for a few days where it's yellow there. It's hard to see, but basically has told you keep your option positions biased on the long side. When I developed the OBI, I thought this was the great answer to people who love to be short premium, and that's their style. But if you have a sense that you like to be short premium, well, if you have a positive OBI, then you're going to want to lean to less premium shorts on the call side. If you have a negative OBI, then you want to have less shorts on the put side because the odds are when this is positive that the impulses are going to be on the upside as you see all of this movement over here. So that's why the OBI is really such a fantastic indicator for direction and also for option traders. So again, that's a level 4 indicator. So that's a look at silver on the daily and the weekly. It's very much like we see in these other in the other charts that we look at in gold. So just that little period right over here where it got above this level is a bullish sign. So I lean more bullish in silver than I do in gold. The next thing I'm going to look at, or the last thing, and I'll get back to that trading question after RV is done, is looking at the TNX CGI market. This is interest rates. Now, I have been putting some posts up on the X platform. I've gotten a little crazy in there lately. I'm constantly posting in there because there's so much in there that I think is hype that I'm pushing back on, especially regarding the crypto markets, which we've been so negative on, and the super hypers are out there trying to push it up. I just got to wonder why some of them even need to say anything about their positions because they have no purpose in exposing that other than just trying to push the market up. So I tend to push back on those. And I have just recently put up some posts on the fact that when Fed head Williams came out this morning, and I would guess that he was sent out because he made some positive comments to say that it's likely that December, is more likely that there will be an interest rate cut because almost like they wanted to save the market from going down any further. Well, there was a lot of wiggle today, but the market is able to move up. But now the question, this one, is about interest rates. So let's take a look here as we expand this right over here. We have got condition right now for interest rates, which are inverse to treasuries that I deem to be quite positive. Now, the most negative case that I can make is that they'll only get up into this area right over here, which are the resistance zones. So this starts at about 4.2% on the 10-year up to here, which is about 4.37%. It could get much higher. This trough right over here really looks like the low that was made. I thought that there might be a little different timing on the low, but there was not. And you can see that what we had was interest rates pop, interest rates come down, interest rates pop, interest rates come down. And look at the cycle rhythms in here. They are crazy good, as you could see. So this one came right here at the beginning of that window of timing right there. Actually, that's misplaced. It should be a little bit earlier in here, and this one should be moved over because we had a slight left shift. So the ideal low on interest rates would have been around the second to third week of November, and the low actually came here around the third or fourth week of October. And if I, just zoom further out in here, you can see how these cycles work. Now, the further back you go, because I can't readjust these cycles further back, you can see that they get off rhythm in here. But these are perfect. This right in here was a little bit shorter. And if you just look at the vertical timing lines in here, you can see that they are really very regular when you look at that. And this low right over here looks very much like the interest rate low. So while the Fed is talking about cutting interest rates, we have massive borrowing by the government. We have massive amount of supply that is very, very likely to come out in the Treasury market that will need to get sold at higher interest rates. And we have China stimulating, Japan coming out with stimulus now of 125 billion. This morning they reported that. These worlds have to keep stimulating their fiat currencies to keep everything alive, because they're now completely living in a debt economy. And what the bond market will do is price in the necessity for higher rates to get these things sold. And the potential for higher inflation based on all of that stimulus. And you look at this, there's hardly a way you can make a case for interest rates going down. Fed might cut interest rates again one time, but I tell you what, I think interest rates are going up. Let's take a look here at this pattern in here. This is just exquisite. So you see the cycle rhythms in there. They're not exactly perfect, but the principle of variance says that they won't be. And then right over here, where it's getting down into this support, you can see this positively configured cycle being built in here. This area right over here, which is between 4.08% and about 4.03%, which are right now just above that. It dipped into it, is the buy zone in interest rates. But you can't buy the interest rates. You need to sell the treasuries. That's why we have it listed that way. So you can see in here there may be some few more days in here where treasuries can get a little bit more pop because there is some little safety bid coming in, but not much. But then after that, I think interest rates are going up, and this would be the beginning of it right there. And then interest rates, that cycle, looking something like that over there. That means that in this next week, treasuries have a high probability, it's not perfect, high probability of offering shorting opportunities, as this likelihood is that interest rates will be going up. That's my part on this. I'm going to turn this now over to Arvi so he can look at the stocks he has, and then I'll get back to Roger, the one trading issue that you put there, and I will be glad to answer that for you. So, Arvi, I'm going to turn this over to you.
Awesome. Thank you, Slim. Let's go ahead and pop over. We're going to look at Hood first. Obviously, all these names got absolutely crushed over the past few weeks here, moving from 150 all the way down to 107. There's a low that's due somewhere around the early part of the new year, okay? But does not look like it's out of the woods yet. If it tries to rally, we look for it to curl its way right back down, and then these all lows are really where I would be looking for this to sell off into on a rally, right? That low there looks very clear to me. So if it tries higher, be watching for that to fade back down. Short term, there's a low that's due shortly here. So we'll be watching for that to, again, turn back up. But that rally is likely to fail, and then look for that to curl its way back to the downside yet again. But as of now, clearly a move to the downside that is still underway in Hood. Jump over to PLTR. PLTR has also been acting very, very weak. A low that is due shortly here. But we have now moved back to this old low. So what that says is, once this forms its low, do we see a weak rally that then moves through that low? If so, you have you have seen a high in hood that is likely to hold for quite some time. There's a trough you can see that's due out in the later part of the new year here. So not a good look there either in PLTR. Short term, a trough that's due somewhere around year end. So if this tries higher, again, we'll be looking for that to fail again back on the downside. As I'm drawn in here, that's really the overall move that we would be looking for here as well in PLTR. Rallies are also still likely to fail back on the downside. Not a good picture. Jump over to PAAS, a silver name here. This one had a low that was due. It is now, seeing a only small move up. But if this can just put in a little higher low here, that would be ideal. And then look for this to turn its way back up to these old highs, right? That's really what we'll be watching for. There is a short-term drop due still over the next several weeks. So in the interim, just ideally chop around here, right? Trade sideways. And then once this low forms, this could be off to new highs after that. So very nice pattern overall here in PAS, just in a bit of a holding period. Finally, we will shift over to URA. Very interesting action in URA. I want you to see this where this moved up, right, from 40 all the way up to 60, and then has come all the way back down to 40. There is a low due shortly here, but not quite yet based on what we're seeing here. What we want to highlight is that there is a low that is due right about here. So we're going to be looking for a little pop back to the upside, form another lower high, and then see this rotate again back on the downside into around year end. Once that happens, if it is as I am ideally looking for, look for it to then see a solid pop back to the upside after that. But in the interim, rallies are also still likely to fail back on the downside here in URA, but a very interesting pattern to keep on your short side list based on our work. Okay, Slim, I'm just gonna go and hand this off to you, sir.
Okay, that's great. What was really interesting is that when you were looking at the PAAS, which is of course a silver miner, that was your analysis on that had the same questions and the same overall picture as we looked at in silver. So, did that low occur already? Will the next low occur a little bit lower? And
Yeah,
somewhere in there's a buying opportunity
right,
is,
absolutely,
is what it
100%.
really
Yep,
looks like to me. I mean, I
yep,
would be nervous to be shorted based on silver making that little higher high where
mm-hmm.
PAS did not.
Right, right,
Yeah.
yep,
Right. So that's how we kind
agree.
of put together some of those things that are stocks related to futures or the indexes. So, right. Good work.
Thank you.
Okay, I'm going to take this last question from Roger, and he says he has a trading issue. I get out of positions, winning ones too soon, even though the chart and the analysis say it's going higher. Seems like I have too much fear. Got some help for me? I know you do. How about Slim AI? I love the way that you put that, actually. The answer is yes and yes. Your assumption about it being based on fear, I think, is accurate. What happens to many traders is that when they have something inside of themselves that is actually not related to trading at all, something in their history, then trading triggers them back to that memory. Whereas there's some consequence to getting something wrong or doing something incorrectly. It often goes back to our early childhood. So sometimes there's some very, very deep work that needs to be done there. The truth is that the market is always noisy. And there's a lot of times when we've done great analysis, the symbol we're looking at is going perfectly in our direction, and we're watching it go there, and all of a sudden there's some little wiggle in the market, or maybe a bigger wiggle, and we still have a profit, and then that clicks in. I'm afraid that I'm going to lose this whole profit because if I do, then I'm bad. There's something bad about me for having allowed that to happen. So therefore, as the market starts to retrace from what had been a very good trade or good direction for you, it really forces your hand and that part of ourself inside, I'll call it the risk manager for this purposes, comes online in order to keep you from not feeling that consequence of getting it wrong. There's such a stigma about having a winning trade become a loser that often clicks in. Now, what there is about that or about you, of course, I don't know. That takes some self-evaluation. I'll just do a little soft sell to you, and that is that there are two ways that you can get information on this right now. And that is, first of all, that Slim AI, when you ask the question, it is very well versed in things about trading psychology because basically I trained it on everything that I know. I've put all of my trader psychology videos into its knowledge base, and it really has a good handle on a lot of that. It is well built on all of the concepts around emotional intelligence, and that can also help you in that. And you can, it actually is trained to help you create a journal and to keep notes in there. You just do that and, give it your name. It will remember you and tell it that you want to save this information in your journal. And then you can refer back to it and build on it, and it'll help you with that, and it'll remind you about it. The second thing is that very shortly, Matt is going to tell you about our holiday specials. Now, I did a workshop that I actually sold to some other sites also. Five essential building blocks to successful trading. In there is a lot of my own story and processes about how to understand this aspect of yourself internally. And when you take that workshop, it's really going to help you in understanding the psychology. And again, Slim AI is trained on all of our workshops. And that means you can ask it questions about that. You go through one of the modules and you can refer to Slim AI and it's going to help you. Because we have taught it and instructed it to do so. Our Slim AI is truly amazing, and it's really worth taking a look at that. Remember, it's on the bottom right of all of the member pages and on the bottom right of the front page for new visitors that come. So it will help you with that. The five essential building blocks to successful trading. It is massively reduced in price. We like to do this at the end of the year because it's our gift to you to be able to give a gift to yourself, essentially. So I want you really to look at that. It will help you a lot with, I think, this issues. There's probably nothing wrong, Roger, with your knowledge of the markets and how you approach things. It sounds like you're quite analytical. The issue is probably deep within you, and discovering that and reframing that. Give that risk manager a new message that you don't need that kind of help to get out of markets when it's wiggling, and it's going to help you really expand your profits. So that's my answer to you on that, and I hope that is sure helpful. And that is the end of our Q&A here for today. All right, I'm going to turn this over to Matt. I'll probably bounce in there on a few things on this because I'm so excited about these Black Friday deals and give the gift. And Matt, you can take over.
All right. Great work, Slim. Great work, Arvie. Okay, I'm going to jump onto the front page here of Ask Slim. For those of you that are new with Ask Slim, I wanted to just spend a few minutes talking about what we offer, and then I'm going to discuss our holiday specials, as Slim mentioned. So first, at Ask Slim, what do we do? Well, we have several premium membership options, and our focus is on technical analysis services, trade planning tools, and education. And that goes for various trading styles. So whether you're a near term, say a few days, or a short term, few weeks, intermediate time frame trader of several weeks to a couple months, or even an investor, we have services, technical analysis, and tools that support your decision-making process. And that's our primary focus, is how do we bring our analysis to a level where you can use it to support your decision-making process, and most importantly, around directional bias, around timing, and key levels. We do have a standalone service for intraday swing traders. It's our day trader service. So if you're looking for price moves that last just a few minutes to a few hours, it's extremely comprehensive. So I'm going to jump over to our memberships area, and we have 4 core memberships, level 1, 2, 3, and 4. And so how this works is as you go from level 1 to level 2 to level 3 and level 4, the depth of the services increases. So at level 1, you start with a focus on the major indexes, where we look at the S&P 500, the NASDAQ, the Russell 2000, and you'll have our charts, our static charts on those services. We have a longer term momentum tracker. But then when you move into level 2, you start to really expand into our focus list of symbols, where we have over 80 symbols that span major markets, futures, highly liquid stocks and ETFs. So that's where you get a deep dive, and you get to have our full chart list, where we have static charts, daily, weekly charts, as Slim mentioned, our multiple timeframes. So those charts that you're seeing us showcase in front of you today and during the Q&A are the same types of charts that you get with these memberships. And then when you go into levels 3 and 4, you really now get your hands-on with our trade planning tools. So some of those are dynamic as they are real time, and then we have others that are applied after hours. So again, all of this effort is to help support your decision-making process when it comes to trade planning, trader education, not only the technical side, but as Slim mentioned, the psychological side of trading. So there's very well-rounded opportunity here at askSlim. And then finally, we have the day trader service, which is a comprehensive standalone service. Now, what we're excited to bring to you is our holiday askSlim offers. So we have what we call our give to gift for our memberships, and that is for level 2, level 3, and level 4. So it's 35% off for 3 months. It's a non-recurring membership. You can give the gift to yourself, or you can give it to a friend that you think has a real interest in utilizing technical analysis or wants to save a lot of time. Because this team here, we put in a full-time effort upon the 4 of us, including Katie. When she's here in the live events, you get to get a feel for her effort. And it just is going to create a filtering process. So all the work that we're doing makes your job as a trader or as an analyst a lot easier. So again, we have 3 membership offers here. Give the gift option 1 for level 2, and then 3, and then level 4, 35% off. And then on top of that, you get an Amazon gift card, and that'll come to you within 2 weeks of the purchase. So if with level 2, you're going to get a $20 Amazon gift card in addition to the discount. And then level 3 gets a $50 Amazon gift card. And then level 4, you get a $100 Amazon gift card. So again, it's an incredible opportunity if you've been on the fence or considering a membership or an upgrade. So that's how this works. Is it either needs to be you don't have to be a member, so you could buy it for a friend or family member. But if you are currently a member, you do need to upgrade, or you could buy it for yourself, and that would just get it extended on. But it does have to be an upgrade. So those are the membership options that you can give to yourself or give to a friend. And then also we have our Black Friday, they come early. Black Friday early specials. I'm going to scroll down to those. So we have 2 fantastic workshops, the cycle analysis workshop, and then the 5 essential building blocks. $400 off on the cycle analysis workshop. And that's very comprehensive. It's really a technical analysis library. It's Slim's body of work that he's put together. It took over 2 years to create. There's probably 40 or 50 hours now of information. It's online, so you can utilize it at your leisure, as long as you have access to the internet and your askSlim account. You'll have access to the psychoanalysis workshop. And the team, Slim, RV, and Katie, also just put together like a mini workshop. We've just added that to the cycle workshop, and it's really, really cool. Each one of them went through a symbol and talked about different aspects of the cycle analysis process. Slim started from a blank canvas and then walked through how he generates the cycle brackets. Katie talked about cycle timing, and RV did what happens when there's shifts in the market. So that is in addition to the discount. And then if you're level 4, you can write to me, get an extra $100 off. The 5 essential building blocks, Slim talked about this one, very focused on the psychological aspects of trading and your process. That's over $200. That's $200 off. So it's only $97. We only do this once a year. So these are our annual discounts, special offers for the holidays. And then as part of Black Friday, we have level 1, get 50% off, only $10 for 1 month. That's going to give you a look at our services. And as I mentioned before, the major indexes. So I do a daily snapshot that I put out every single day after the market closes, and includes multiple time frames. You get about 15, 16 different charts, projections, key timing, so on and so forth. And then finally, as part of the Black Friday deals, we have our day trader service, and this is 25% off. It's 3 months, non-recurring. It's only $99. It's probably the most comprehensive day trader service if you're an intraday swing trader that you're going to find. And I'm going to do next week, I'm going to do 2 open houses on Tuesday and Wednesday, live webinars where I'm going to step through. On Tuesday, I'm going to go through the Black Friday deals, talk to you about each workshop, give you a little sneak peek inside of those, show you level 1, show you the day trader service, talk to you from a trade planning, decision-making process. How do all these tools and services help? And then on Wednesday, I'm going to go through level 2, 3, and 4. So watch for information on that coming on Monday when I will be going live on Tuesday and Wednesday. All right, that's everything on our holiday specials. We encourage you to check us out. If you haven't already, if you already are a member, consider it for a friend, or look to upgrade and give it to yourself. All right, Slim, back to you, or if you want to.
Thanks. Yeah, I actually I want to add in a couple things. First of all,
sure.
The specifically thinking about the Black Friday specials, the 5 essential building blocks to successful trading is an unbelievable workshop, because there's almost nothing like it out there, where it looks at these particular building blocks, as you can see right over there. Building emotional fitness. It's about getting that emotional muscle so that you can then respond to markets in the proper way, like I just discussed with Roger a few minutes ago. It's balancing your trading style and personality and risk tolerance and more. I mean, it's just, if you're used to being an investor and then you're trying to be a short-term trader, I can almost guarantee that what you're looking at is going to throw you off balance, because you have to make big adjustments. And the building block number 4 is about those 6 key areas of discipline, which is just so important. It's not just about taking the losing trade properly. It's about so much about you and getting yourself in the right place to be fit, to be able to be successful in the markets, and then how to create your own winning formula. There's really nothing like that. Can you imagine being able to buy this now for just $97? I mean, that's unbelievable. So if you're, at all in a place where you're saying, well, I'm not exactly sure what's going on for me, you take this workshop and I think you're going to discover something. And then the other part of it I want to tell you is about the day trader service. And that is, I started out trading in 1974 on the CBOE floor. And, at that time, of course, I was a market maker. So that meant is that I'm a very short-term trader, because essentially I have to make a market, buy on the bid, sell on the offer. My goal was to make those little eighths or sixteenths, and that's what our job was as a market maker. And then as my style evolved and I moved off the floor in 84. So I started in 74. I moved off the floor in 84. That's when they were starting to trade the index futures. And I needed to figure out the best way that I could have access to the floor on the Merc. So I had to become a Merc member and put a trader on the floor for me that could get hand signals, because I was a scalper. I was, one that was trading from off the floor, looking at all the market information, and then just figuring out how I can get an edge in the market. And I was trading the big S&Ps at the time. So that was 5 times the size of the E-mini. And that's what I did. But now, when we started to design this day trader platform, I said, wow, right now, the only edge you could possibly get as a participant in the market on short term is understanding momentum conditions. It's the only way. You have to understand when the highest probability of an impulse is coming. So we started to build this day trader. And then we built this impulse monitor, and then Matt's a roadmap there that you see on the right on the 15-minute charts. And my 8-minute favorite strategy is all there. This is Matt showing you our cockpit number one, but cockpit, you're showing actually the replay system there.
Yeah, I'm showing you the replay system because you were
Yeah.
talking about an impulse, Slim. And if you look at the Russell was telling us very early today that it was the strongest of the indexes. And you can tell that for a few different reasons. I'm just jumping in here. We have the SMI on the bottom here, our custom SMI, and you can see it's got just a relative strength value. So you have -61 on the SPX, -77 on the NDX, and it was actually only -16 on the Russell. And then the couple indicators that we have with our reversal scouts on the Russell, our reversal scout slow was turning up positive here. Now, if I fast forward, so we do screenshots all throughout the session. Every 5 minutes, there's a screenshot gets taken of cockpit number one, and you can see here that both of our reversal scouts in the Russell turned up right around, it was 9:48, and then you'll see the impulse monitor turn on right about now. So the impulse monitor might have been 5 minutes or 3 minutes earlier, turns on. And today, obviously, the Russell is really outperformed. And then we have our acceleration zones, which are the yellow boxes. So when you get into an acceleration zone and you have the backing of the momentum indicators and the impulse monitor, there's an extremely high probability, better than 60, 70%, that you're going to get all the way through the acceleration zone. And that's what we saw today in the Russell, and it really got up almost all the way up to our key resistance zone. But what also is helpful is you see with the roadmap, you can see the support zones. So this is all this work is done before the market opens. And then you have the opportunity to see two different cockpits. One is with the cash indexes in the ETFs, and then there's a futures grid, which is live also running. And you can look at either one of those grids, and the futures grid actually goes down to a 3-minute setup for you as well.
Yeah, fantastic. So, of course, you can go back and use this replay system and learn so much about how you can understand how the market's moving, how it's changing, how your trade setups could have been coming from this. And the cockpit number two is the one I really want to focus on in reference to my understanding of the markets, because that has our trader radar in there and our momentum indicators. And when I think about how I traded back in 1984 through the early 90s from off the floor, it was all about finding the edge. Well, there's no edge now, as I say, other than understanding momentum conditions and when the biggest impulse will come. And man, that cockpit number two that we have the indexes on is just incredible. I've never seen anything like it. So,
Slim, I'll put it up here
you can
for
put
a
it up there.
second.
Great. Okay.
Yeah, and there's going to be some updates coming next week with cockpit number two that I've been working on. But you can see here the ES is up on top, the NQ is on the bottom, and we're going to introduce some new signaling with these arrows that will let you know when there's a momentum continuation signal coming in, and you can see on the ES on the 8-minute how that really helped to give you a feel.
I love it when the 8-minute turns up and then the 3-minute is doing it. And when they get in alignment, there's your
Yep.
upside impulse right there. And you see
Yep.
the dark green on the trader radar. I mean,
Yes.
phenomenal. I mean, I've never seen anything like this. And Matt, you put just a ton of work into this.
Did.
So
Yeah, we were in our askSlim labs for many months putting this stuff together.
yeah. So incredible. $99 for 3 months to try this out. Mind-boggling.
That's
All
right.
right. I took this section way, way longer than I intended on, but I told you I'm so excited about this.
I know.
Yeah. All right. Thanks.
Yeah, great work.
Yeah, you too.
All right, well, that wraps up a look at our special offers. And again, I'll be going live next week, Tuesday and Wednesday, doing deeper dives into our memberships and these Black Friday deals.
All right. Great work. Okay, we're going to move on right now.
Yep.
All right, stock market analysis and projections. First, of course, this important information. This slide simply tells you about our approach to analysis and about when you use the information we provide or anybody provides to you, and all about trade ownership, because when you apply the work that we do it has to be with your own analysis, and you have to have trade ownership, or else you'll be waiting for somebody else to tell you what to do. It's the importance. It speaks to the importance of personal responsibility. And believe me, if you have that, it's going to improve your overall results. So please do take a moment to read this slide. This is Slim's take. I want you to, just to spend a few minutes in what I'm going to share with you here, because I'm going to talk about the AI stocks, the monetizers versus the overspenders. I think this is important analysis. I'm going to share with you the truth behind the AI trade. All rallied, most fell sharply. There's a couple of them that still held up, Apple and Cisco specifically. And there is a difference in these two groups. And I want to talk about that just really briefly. These companies are the monetizers. They're the real winners longer term. These companies aren't just selling the dream of AI. They're booking AI revenue right now. Some of them will do better at their ROIs early on. Some of it will come a little bit later. But this is the part of the AI trade grounded in real numbers. And you can look at the names on these stocks. And I'm not going to go through every one. You see the names here. There are notes next to each of them. And it speaks to why these are the stocks that are likely to do the best job at monetizing their spend. And it's because they're getting in revenues, of course. You have Microsoft, which the money is flowing directly into Azure. You have Amazon, where it's in AWS. So they're getting huge amount of revenue already. They're getting an ROI. Palantir, they have big government contracts, which are accelerating. And Apple's doing a great job on its selling hardware based on its monetizations, but I'm a little suspicious about that one, but right now it's doing it. And you can see in here, interesting, Adobe has gotten absolutely slammed. Even though Firefly helps boost their subscriber revenue and helps with stickiness, they're really going through a business slowdown, and that stock has got it hammered. Once there's some sort of attitude change from investors and they realize that Firefly is going to be pretty helpful, you could get a big upside pop in there. But that one is still getting a revenue boost on its spend. So you get an idea. These are the stocks that are, already getting ROI and have some basis for the upside move that they have had here. Now, if I switch over to this next group right over here, this is the AI overspenders. They have big capex, huge capex, with slow or no monetization. These companies are spending faster than they're monetizing. Their build out requires massive borrowing and there's strain on their balance sheets, with monetizations years away, if ever. In the corrections, these are the burners and they get hit hard, maybe the hardest. So when I say that, in my mind, I have not only do they get hit hard, but when we get into the next rising phase in AI, well, maybe these are the ones that a bounce needs to be taken advantage of. And this is the list of stocks that the paths to monetization are just really unknown. Google, a tremendous amount of spend. We see Meta collapsed off of its massive spend, and maybe as the sentiment change in Meta that has really made a big difference for the entire group. Again, I'm not going to go through this whole list, but you can go through that. The message here is simple. AI stocks have had a huge run. Everything surged on that run. The buyers could not figure out what to buy next. And man, was I ever critical of that huge spend and the bubble that I thought we were in AI. But in the next phase, these companies will rally with the rest of them, but most likely respond to this reality. So what you want to do is watch these lists of stocks, see how they do in the upside moves. And if we get into the period where I think is past the corrective period for the stock market, which would be January, February, where I can see an upside phase coming in the stock market, that's the time to see how well these do, really. So remember, this is not advice. The usual disclaimers apply. I just simply did some analysis that I wanted to share with you, and that is Slim's take. Market Week Live Brief. The market brief for this week, well, stocks fell hard. It's the worst week since late March, though they've gotten some bounce here on Friday. Still think it's the worst week since late March. Limited news came out. The government shut down, delayed the data, and some October data will never come. That we'll never see it, so we'll be getting November data in December, and I don't even know if that's going to come in time for the Fed to make any decisions. NVIDIA, which I just talked about in Slim's take, had great earnings, big forecast. The stock surged and then failed. It caught the bulls, it caught the buyers in the stock market, and it has worrisome charts. Now, NVIDIA is one of those stocks that is monetizing, but it got, investors got way out over their skis on that one. And when you start looking at the price to sales in there, it was really quite frothy. And overall, I would say in a corrective phase, probably going to do better again later on. Walmart, well, they beat on consumers looking for lower prices. The consumer is tapioca. I mean, they are so tapped out. If you look at all of the numbers as far as the amount of stress in the markets that they're involved in, consumer debt, auto loans, home mortgages, I mean, their consumer is very strapped, and they're going to shop in places where they can save some money. And Walmart even said that they're winning in that one. So it's really been holding very positive patterns, and it's still looking good. Crypto collapsed. Earlier in the show, I showed the analysis on Ethereum. That collapse is also weighing on the stock market. I said all along crypto was a speculative bubble. I think we've seen it pop here. All of these discussion about 150,000 or 250,000 or $1 million. Michael Saylor even said $13 million for Bitcoin this week. Well, he's trying to talk up his stock. You may see some news out there on strategy. That's MSTR. And that stock we were very bearish on, and it fell from close to 500 all the way down in the 160s today. And there's been some negative news out on it that's scaring people. I don't want to spread any rumors, but it's just simply about the nature of the company that they are. The indexes want to have diversified companies. They're not interested in a one product. Bitcoin treasury is essentially what MicroStrategy is. So there's some speculation on whether or not it's going to be removed from some of the indexes. And there's not a meeting out in that until sometime in January. So there's no reason, but there's some panic pushers up there on the internet on that. So that's why the stock has gotten hit so hard. That's why Bitcoin got so much weaker today again. And Bitcoin, in my opinion, is a long way from making a bottom. Indexes for the week down sharply. We got a bounce in here since I put these numbers in. So NASDAQ down about 5%, S&P 500 maybe a little less than 3%, Russell about 3%, and Dow about 2%, 2.5% as of noon here on November 21st. So that is the market brief. Now we're going to get into the stock market analysis and projections, and we're going to look at the Russell and the S&P 500 and the VIX, and we'll be back to look at the MCM after that in just a moment. So let's switch over here to the charts. I want to start in the Russell because it was the Russell that tipped us off that the market was peaking. The Russell got weak first before the other ones did. And then we can see that what happened was that the reversal got turned over right over here. It then said to us that the peak was in. Now, is it the peak for this cycle right there or the peak for the 37-week cycle that's right over there? Not really, we couldn't identify that, but now that it broke that low, it told us that this 37-week cycle was very much in play. That points to a decline over here in the support. There's a minor support right over here at around, let's just say 22.95. Then there's bigger supports here at 22.34 and down over here at 21.40. So those are our downside projections. And I put them over here on the daily chart also. So this is your weekly cycle analysis right over here. And I'll just blow this out so you can see how these things align. And then we'll look here at the daily chart. And you can see the daily chart. Now, if you look at this cycle right over here, it was really a neutral cycle. It peaked a little bit on the right side, so it's a bullish right hand translated, but then it got back down to this low. Then you had this rally in this cycle. So you see the trough right over here, the bottoming phase. So this is the corrective phase, the bottoming phase, the rising phase, the peaking phase. That's how we look at these phases. And you'll learn that in the cycle analysis workshop. So it made this double top right over there and then came down right over here. So if you complete this right over here and it gets down to that same low or a little bit lower, it says to me, well, there's something negative going on. And if the weekly is negative, then it means that the right over here will be a deficient rally. That's what happened. And of course, this is how head and shoulders form. Left shoulder, head, right shoulder, deficient rally, fail in the sell zone, break the low, and then it sets up the decline. So this sets up a decline into this cycle here, which is early December. And that means that this rally that's going on right now is likely to fail. And, maybe it gets up a little bit more into these resistance zones. This resistance right here is 2370. This is about 2390. And this right over here is about 2410. So maybe it gets up into here and then sells off again. The higher it goes here, the less probability of this deeper sell-off. So it may just be that it rallies a little bit more, and then that is the projection for that cycle. What would happen then, because the weekly cycle is still negative, would be that you would get another setup in here that looks a lot like this, and it would then tell you that, this is kind of what we would look at right over here. And that would then set up this decline into this later December period right over there down to that support. So that's how I'm projecting that how it kind of sets up right now. This rally too early, it probably comes down again. Another rally here. So you see this is all chop right over there and then comes down again. But the key thing here is that this cycle right over here, which is 17 bars on the Russell. Now I moved over to the S&P 500. Before I leave this chart, I want you to note the option bias indicator. So if you were an option trader and you wanted to know what direction to keep your options in, well, fantastic. You can see in here the slim ribbon PO telling you the momentum signals were likely to be pushing to the upside with further momentum. Perfect. Look what happened here. First of all, this turned negative, and then you got a negative signal right over here saying it was likely to keep going down again. This is where you got the bearish option readings right there telling you stay on the short side now, and that has been spectacular. So now let's take a look as we move this over to the SPX. And let's take a look here at the weekly chart on the S&P 500. And this is, again, the same thing. There's that 37-week cycle we're looking for. These yellow areas are the periods of risk that we have in here. And that said that we were likely to get a pullback. Now, look at the reversal scout roll over right over there. That you can see is great. It tells you that the cycle finally did turn to the negative side and we're in this corrective phase. You can see what happened right here where it turned up. It told us that this was the bottom right over there. So this is just great information. Also, cycles tend to head over to the 34-week moving average. And you can see it's rising in here, so maybe it gets up to, to this support over here around 63.58. It already got down just over 6% right over there. That was the 5% minor support level right there. Here is the 23.6%. So that is what I consider to be the best case for this decline. That would only be a 7% correction, but this 7% correction is really ripping those stocks that were bubbly. As you can see, that would be a bad 7% correction. This is the 10% correction, which only is what people would say gets it down to a real correction. This is the declining phase. This is where they would say the real correction is 10 to 11.3% right in here at these supports. And I think that is pretty likely here coming into December. People write to me and say, forget about going down in December. There's positive seasonality in December. And I'll tell you, well, that doesn't always happen. There are some Decembers where the market actually is weak. And if you go back and look at the charts in December, you'll see that's true. I think this year the Christmas rally comes from somewhere in the third week of December into the January period. So this is where I'm looking for a decline. Now, I want to remind all of you that are looking at this, if you've watched this whole show and you're on YouTube or you're watching the clip on YouTube, put some comments on there. I especially want to hear what your ahas are, what you learned, maybe what you disagree with. Especially if you're members, you could put that up in Discord. The team will share that with me. So love to get your comments on whether you are, really looking at this type of analysis, if you believe it, and if you're adopting it, all of those things, or if you absolutely hate it, you could tell me that too. So that is the weekly in the S&P 500. So here is the daily, as you could see right over here. So what I've done is I've put in some projections. Let's go back to the daily there without those projections. And you can see that this cycle right over here is the dominant cycle that I'll call it for the S&P 500 that you can see right there. This is that Russell. So if you look at the Russell and how it plays inside of the S&P 500 cycle, you can see where that bottom came right there on the Russell. I have it marked Russell low, and then the rally came right over here. And then the rally failed in here because, well, the RUT was still looking like it was coming down, and this had a bottom to make. So here's where that Russell low is, the next one right there. What that suggests to me is that this rally in here will get into somewhere into this, resistance area, and then begin to come down again. Now it could chop in here and then get a rally going into right there, which would take it into somewhere into early December. Let's say December 8th, 6th to 8th, right in there, and then come down again and complete the weekly cycle. Now, what would that look like in here? And I have done those projections for you to see. And this is what it would look like. This is following the cycle patterns. This is that corrective period right over here in the weekly cycle. And if it were to follow, what the ideal pattern would be, it would be that this is the low. It's already made right over there. That it would continue to rally here. The Russell would then pull it down again while the Russell is making its low. See how I'm moving in the different cycle patterns, looking at the messaging from those, looking at the messaging from some of the evidence in here, because we're in a downward pattern on the weekly. And it would say to me, you get some kind of a rally in here, which probably started today. You get some sort of a pullback where the Russell makes a low, but the S&P 500 does not. And then they both move up together right over here into sometime in December. And this is where the weekly cycle takes over again. And they both move down together. And you can see now both cycles basically make a low at the same time, just before Christmas. Maybe it's the 22nd, 23rd, something like that. Maybe it's not this deep that you see right over here at 6,200 on the S&P 500. Maybe it gets only to here, which is 6,435 on the S&P 500. But I've taken the sum of the evidence in here, and I have extrapolated from what I have in here, a short-term Russell, a short-term S&P 500, how they play together, and how those all play in the declining weekly cycle that we have right over there. This is what you learn in cycle analysis, how to do multiple time frame analysis, how to put the projections in, how to understand things in not only price, but also in time. And the weekly envelopes, as you could see that I have marked off in there, where this is the rising phase, as we would see it enveloped, or in this case, a channel, using the theory of JM Hurst, who wrote the book that I have learned to do this method from, and our method has evolved from. And then this is the declining phase, and that's very likely some variation of what this will actually look like going forward. So this is how I image in my mind. I project, get some sense around what I think. Now, if this rally fails today and the low here is on Monday, it really doesn't change much in here. It doesn't mean, hey, this didn't work. We're looking for some kind of a little bottom to form in here and a little wiggle going on, and maybe a choppy market here all the way out until maybe the second week of December before this corrective process takes hold. Let's take a look at the VIX and see how that aligns in here. So looking at the weekly VIX, we had suggested that the period right in here where this was making a bottom was bringing us into where the market would begin to correct and where there would be a big decline in the market. You can see that right over there. And Roger just posted the Queen's Gambit. I love that because I talked about that elsewhere. And yes, projecting out like there is like her looking. If you didn't see the Queen's Gambit, you have to watch it. Is the title character in there would just look up at the ceiling and be able to make all of these projections as she put all of these moves together in advance. And that's really very much what we do as psychoanalysts is take the sum of the evidence, put it all together, and get the highest probability of the moves moving forward. So that's what I did in here, and we had VIX coming up. Now remember I just said there is likely going to be a rally sometime out into the 8th of January, 5th, 6th, 7th, 8th of January, and then begin to market move down again. So this is some people would look at this and say this conflicts with what you expect to happen in the stock market. So if I expect the stock market to rally up into, let's say, the first or early in the second week, that would be somewhere right over here. So what would happen in the VIX is that I'm just going to draw some lines in here for you to see is that it would come down in here. You'd start to see some downward action and the VIX would come down right over here into somewhere in that date that we're looking for. But then the completion right in here would take you up right over here, and you would then begin to move upward again in the VIX as the market has its big decline into that like second week. So you see that's how I have that drawn in there. And then after that, the VIX has its big decline into this period there. So if there's a big drop in the VIX as the market rebounds here into early December, that's how it fits into this cycle. Then there would be a big rally in the VIX as the market declines into that period just before Christmas. And then in the period between Christmas and New Year's, you get another big drop here in the VIX. That's how the VIX would set up within the patterns that I just said to you are likely coming in the stock market. So I hope that was extremely valuable to you as I show you how we put all of those things together. I want to now go to the MCM just quickly and give you an idea of the conditions of the market. Now, if you become a level 3 or 4 member, take our special give the gift to yourself, and or have somebody who was saying, well, what can I buy you for Christmas? Have them give the gift of level 3 or level 4, and you get the market condition monitor. And you can see in here what I'm looking at here is our algorithms built into this. And it gives you some sense around market conditions. So this was all very bullish, as the market was moving up. And now what you see is that on the longer term, remember the S&P 500 configuration on that weekly chart is really positive. We're in a corrective period that may be 7 or 10 or 11%, but that wouldn't change the fact that you're likely to get a rally in January and February. Maybe to a new high. I'm not really sure yet. Depends on how deep we get here. But what this says to you is right now we're in that intermediate corrective phase, which is basically neutral to the IWM, which was the downside leader, as slightly bearish. If I go to the short term right over here, you can see SPY, QQQ, IWM, DIA. They are now in bearish mode right over there. So that's for short-term traders. And if you were like a short-term swing trader, 2, 3, 4 days, you'd be looking at the near term. And you can see that now as the market is beginning to try to get a little rebound in here, that has now gone to neutral. So that's a little sign to me on these upticks that low that we're thinking is going to be made now for just the short term into early December may actually be setting up. Let's take a look now as we look at the key stocks that are in the short-term setups. The ones that are very bullish, you can see right over here. I'm not going to call off the names. You can actually read them on your own right there. And I'll just keep scrolling a little bit more. You can see The ones that are very bullish are really withstanding this downside move in the stock market. If they weren't, these 2 hours would be turning red. They'd be neutral or red, but these are the stocks you can hardly break in here. There's no selling coming in them. The ones that are in very bearish condition are the ones that are right here, and clearly there are selling coming in there. If you see the weekly is neutral, like you see right over here in cadence, well, that's not enough in here on the sum of the evidence to do anything but to move it, keep it in very bearish conditions. What you'll see, what happens is that when you get through this list here and we move it to where it goes from very bearish to bearish, and it's hard to get there, you'll see that what will happen is that here you'll start to see some green showing up in some of these other indicators and some upticks in here, and that may be an indication that they're making their short-term lows in here, but it's really not enough. If you wanted to know when something, let's say you wanted to buy Texas Instruments, and you just go to notify and you give yourself a note that says, I want to know when this goes to slightly bullish, and you click that up, and it will put in that bell right there. And if you download our platform, our alert platform, which is right in the dashboard, then it will tell you, it will alert you and said, Texas Instruments just went from neutral to slightly bullish. And you'll have that, have it essentially tracking for you. There's almost, I want to say there's nothing like this out there. It has all of our algorithms in there, all built in, and just absolutely fantastic. So you get a picture of what the market looks like right now. And in the short term, it is bearish. And it says to me that, we get these little pops intraday or for a couple days, pretty likely that it will be moving lower again. So that is a look at that. That's the stock market, and a look at our market condition monitor. Remember, that's available to level 3 and 4. The difference is level 4 gets the 3-minute included in there. That's for the people that are really day traders. And our day trader covers a lot of that anyway. So just fantastic information that we have. You quickly, our holiday specials are on, Black Friday deals and Give the Gift. You can get full information from Matt at askSlim.com. This essentially tells you about what's in our Black Friday deals, day trader service, level 1, my 5 essential building blocks workshop, and our cycle analysis workshop. Take advantage of those through November 30th. And that's how long the Black Friday deals will be running. This is our Give the Gift of askSlim. Give the gift to yourself or to somebody else. And when you do this for non-recurring 3-month memberships, you're going to get our specials. Not only you'll be able to pay the sharply reduced price. Well, talk to your attorney about your tax attorney about the deductibility of that. We're going to make it a little bit cheaper. Well, for level 2, we'll give you a $20 gift card. For level 3, we'll give you a $50 gift card. And for level 4, we're going to give you a $100 gift card. That's the fantastic way you could take advantage of this. Go to askSlim.com, top of the right page right over there, and click our holiday specials. And don't forget, check out Slim AI when you go and check out our website. That's it. Showed you everything. Just do everything you can to get on board and learn from our amazing team of pros of the stock market. Matt, I think it's just you and I now.
Yes. That was a great show, Slim. Great work.
I really appreciate that. Yeah,
Absolutely.
I spent a little time on that, so
that's good.
Yeah. All right. So we'll have the next market week coming up for you after Thanksgiving, and lots of great stuff coming. Don't forget,
I'll be live a couple days next week, doing some demos and walkthroughs.
Yeah. Oh, that's right. That's absolutely great. So check in with Matt about that information also, and have a great week. And don't forget, be really careful because it is so dangerous out there. And we're always wishing you good.